Hello and welcome to the look ahead for Thursday, the 17th of April with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be watching out for Australian unemployment and jobs numbers. Then in the European session, all eyes will be on the ECB for their rate decision. We have US jobless claims in the US session. Earnings ones to be watching for are from Netflix and Sainsbury's. So just kicking off, though, with ECB interest rate decision. The central bank is widely expected to cut interest rates by 25 basis points. In fact, the market is pricing in around a 94% probability that the ECB will cut rates by 25 basis points. That will take the rate to 2.25%. There is, in fact, a 6% probability being priced in that the ECB will cut rates by a larger 50 basis points. This will make the third rate cut of the year by the ECB. It's quite interesting. This rate cut, or the interest rate decision, comes as inflation in the Eurozone has eased below the 3% level. It's closing in on the ECB's target 2% level. And growth is pretty stagnant across the region. Now, after the March meeting, there was actually a sensation that actually the ECB would pause rate cuts, given this sort of optimism that there was coming from increased spending expectations surrounding Germany. There were considerable fiscal changes, or a U-turn to increase spending for defense and infrastructure, which was expected to help boost inflation. But since then, obviously, we've had Liberation Day from the US, which has brought back the threat of tariffs, which are expected to ease the, or at least slow growth within the region. So that for that reason, the ECB is expected to be cutting interest rates and could adopt a much more cautious stance. Now, here we're looking at the chart, which is the euro US dollar, trading just around that 4-year high, eased off from the 4-year high of just below 115. Now, this has obviously been a result of US dollar weakness, as well as we've seen the euro really charge up higher from the lows that we saw around the 103.75 level just at the beginning of March. So in a very short amount of time, we have seen a very big increase in the euro. And that is not because of the improving outlook for the Eurozone, quite the opposite. But actually, I think it's much more flows of sort of the market seeing the euro as an alternative to the US dollar, potentially as for safe haven flows. Obviously, today we've got the US dollar weakening again, which has given the euro a boost. But so, I mean, it remains to be seen how much of an impact the ECB interest rate decision will actually have, whether it does sort of pause some of those flows, given that it's expected to be a relatively dovish decision. So that is euro US dollar. Levels to be watching. We need a rise above that 115 or so 114.70, I think it was. Just bear with me. Let's get it exactly. 114.75 on the upside to create a higher high. We seem to be we're trading around the 114 level at the time of recording. Just on the downside, support, their initial support, we'll be looking at around the 112 level. That was the high that we saw back in September 2024. That if we get a break below that, that could lead to a decline towards the 10 round lumber and 109.40 on the downside. Just whilst we're sticking with currencies, let's just take a quick look at cable. This is an interesting one, given that we had UK inflation data, and this goes to show how much of these moves are actually US dollar weakness. The pound cable rose to a fresh 6-month high, 132.92 today, despite UK inflation cooling by more than expected. So UK inflation cooled to 2.6%, down from 2.8%, adding or supporting the view that the Bank of England will be cutting interest rates at the May meeting. Yet despite that, we've seen the pair push higher again, just on the back of this US dollar weakness amid the ongoing uncertainty surrounding the US trade tariffs and the latest developments there. Latest development is concerns over export restrictions to China of NVIDIA and AMD AI chips, which has had quite an impact on the S&P 500. So let's just take a quick look at what's going on there. We do obviously have some US data, US jobless claims, but any data from the US is really playing second fiddle to the latest announcements from the Trump administration. We've got this downtrend still very much in place, given that the recovery failed to rise above the 5500. That's sort of a level that we've got to see buyers get above in order to sort of negate this downtrend. Otherwise, it's continuation of a series of lower highs. Just on the downside, levels to be looking out for 5,300. That's the next one before we get down to this 5150 level. On the upside, I mean, immediate support there at 5,400 and above there, as I said, the 5,500 is pretty key. But we've got the death cross signal forming here with the 50 SMA crossing below the 200 SMA in a bearish signal. And just finally, also, we're going to be watching out for Netflix. Now, Netflix will be releasing Q1 earnings. Interestingly, this is the first time that we're hearing from Netflix when they don't have subscriber numbers. So they did give a warning from a year ago. They will no longer be handing out subscriber numbers, wanting the market to focus instead on earnings and margins and revenue. So this is what we'll be watching for tomorrow. Expectations are for EPS of 574, and that's on 10.54 billion in revenue. The whisper number for Wall Street is 5.86. So this remains to be seen whether we beat earnings. As far as levels are concerned, this is the high that we're watching out for, 993. We've obviously just come down from this all-time high here at around the 1064 level, fell to that low there. So we've seen a series of lower lows, low down at 820, have recovered, testing that high there that we saw at the end of March. That level buyers need to overcome in order to gap back up. So stronger than expected numbers could see a gap back up to that 1064 number. Obviously, a lot of attention will be on the outlook, what expectations are about consumer sentiment. Obviously, has deteriorated quite significantly in the US. So what that means for the outlook for Netflix, and also globally, if there's any potential impact of the trade war on the streaming giant, which is indeed international in its customer base. So failure to rise above there, maybe we see a double top forming, in which case be watching out for this level down here, which is the 820 that we talked about, which is also the 200 SMA. So that is everything from me. I hope you've enjoyed what you've seen, and if you do, then please do give this video a like and subscribe for more videos like this.